Hey everyone, if you're an entrepreneur or looking to establish or expand your business in the UAE, you have probably heard of the free zones. These are the special economic areas across the UAE that offer huge benefits like 100% ownership, zero taxes, and full reputation of the profits. In today's video, we'll break down what it really takes to qualify for a UAE free zone, advantages and limitations of the qualified free zone income. For this, we'll have to understand what is the free zone, what are the free zone persons, qualifying free zone person, and what is the qualifying income. Free zone is a designated and defined geographical area within the state that is specified in a decision issued by the cabinet at the suggestion of the minister. To understand the impact of the corporate tax on the free zone persons, first of all, we need to know that in the context of the UAE laws, persons are generally categorized into the two types. First is the natural persons. These include the individuals who are doing business independently and in their own capacity. Examples are freelancers, stall establishments, and civil companies. These persons conduct their businesses from a free zone. They cannot be recognized as a free zone person under the UAE law. Second category is of the juridical person. This category comprises of the corporate entities such as the limited liability companies among others. These persons can be considered at the free zone persons provided that they have been incorporated in the free zone. According to the law, Article 3 of the law, income of the qualified free zone person, if it is the qualifying income, its taxable rate is the 0%. And if the income is from the non-qualifying income source, then the tax rate is 9%. However, a qualifying free zone person has a right to elect this to be subject to corporate tax at the rates of the 9%. There are certain conditions for to qualify for a free zone persons. These conditions are the following. Number one is that they must meet adequate substance in the UAE, which means that they must undertake core income generated activities in the free zone, have adequate assets to conduct such activities, must have adequate number of qualified employees to conduct such activities, incur an adequate amount of operating expenses to conduct such activities. Activities can be outsourced to a related party in a free zone or to a third party, provided that such qualifying person has adequate supervision of the outsourced party. They must comply with the arm's length and the transfer pricing rules, must derive the qualifying income, which shall be explained in the later slides. They must not elect for the 9% tax rate application, must prepare the audited financial statement, and must meet the de minimis requirements, which means that their non-qualifying revenue should be the lower of 5% of their total revenue, or 5 million dirham. Sorry. Now I will explain how to calculate the de minimis percentage of the 5%. For the nominator, we take the non-qualifying income, which comprises of the excluded activities and the non-qualifying activities. And for the denominator, we shall take the non-qualifying revenue, which comprises of the excluded activities and the non-qualifying activities and the qualifying revenue. There are certain activities which are excluded from both nominator and denominator calculations. These include the immovable property if it is the non-commercial property, and if it is a commercial property, and if the transaction is with the non-free zone person, then it is excluded. The revenue from the domestic or foreign permanent establishment must be excluded from the calculations. Now I shall explain what is the qualifying and the non-qualifying income. If the qualifying income is from the free zone persons and it is not an excluded activity, then it is the qualifying income, and if it is from the non-free zone person and it is the qualifying activity, then we must see that if it is not excluded activity, then definitely it will qualify for the qualifying income. Any other income provided qualified free zone person satisfies the de minimis requirement. If this requirement is satisfied, then any other income will qualify for the qualifying income. Next comes the non-qualifying income, and the tax rate of the 9% shall be applicable on this, which includes the any income from the permanent establishment if it is domestic or the foreign permanent establishment. And it also includes the income from the immovable property. If it is the commercial property or the non-commercial property, both are included, and commercial property is considered if the transaction is with free zone persons, then it is a qualifying income, and if the transaction is with the non-free zone person, then definitely it will qualify for the non-qualifying income. Now I will explain that what are the qualifying activities. These include the manufacturing of goods or materials, processing of goods or materials, and distribution of goods or materials in or from designated zone to a reseller customer. Customer must be the reseller. It must not be someone who is the final consumer of the product. Provided the goods and materials entering UAE must be imported through the designated zones. And then comes the holding of the shares or other securities, ownership management and operation of the ships, regulated insurance and fund wealth management, headquarter services to the related parties, commercial property if the transaction is with the free zone person, treasury and financing services to the related parties, financing and leasing of the aircraft, logistic services, and any ancillary services to all of these. There are certain excluded activities, means non-qualifying revenue. Any transactions with the natural persons except fund management services, wealth and investment management services, owner management and operation of the ships, financing and leasing aircrafts, regulated banking activities, regulated insurance activities, finance and leasing activities, ownership and exploitation of the commercial property other than the transactions with the free zone in relation to the commercial property located in the free zone, ownership and exploitation of the intellectual property, and any ancillary activities to all of these above activities. I summarize the previous slides regarding the source of the income. Then we can see that there is the income from the not from the free zone persons. If these are from the qualifying activity, then it is the qualifying income. And if it is from the non-qualifying activity, then we must apply the de minimis threshold. If it exceeds the threshold, then it is the qualifying income, and if it does not exceed the threshold, then it is the non-qualifying income. And if the income is from the excluded activity, then again we shall apply the de minimis threshold to see if it is exceeded or not. If it is exceeded, then it shall qualify for the qualifying income. Next comes the any income from the free zone person. If it is again from the excluded activity, then we should apply the minimus threshold. And if it is from the non-excluded activity or the qualifying activity, then it is the qualifying income at which the 0% rate is applied. There are certain limitations of the qualifying free zone persons. These are: the qualifying free zone persons cannot be part of the qualifying group. Qualifying free zone persons cannot join a tax group, where a tax group can where they can submit a single return, and their group transactions are not subject to the corporate tax. They cannot enjoy restructuring relief. They cannot transfer their tax losses to another taxable person. Companies should pay attention to the nature of their activities to see if there are qualified activities or the excluded activities. Then they must see what is their customer base, free zone persons or the non-free zone persons, and to see the type of their own assets, if it is a commercial property or the non-commercial property. Even though a free zone entity might have certain non-qualifying revenue, the de minimis rule can allow the entity to still be considered as a qualifying free zone person if the conditions are met. Thank you for watching. I hope this video helps you to understand what it takes to qualify for a free zone in the UAE and how these areas can benefit your business. Don't forget to drop any questions in the comments. I would be happy to help. Wishing you the best of luck with your business journey in the UAE. See you in the next video.